Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. So today, let's have a look at how the latest interest rate cut might affect us all. The Reserve Bank of Australia has reduced the cash rate by 25 basis points, which is the first rate cut for nearly 5 years. While that decision was widely forecast by economists and the market, the decrease in mortgage repayments will of course be celebrated by all mortgage holders after bearing such sharp increases over recent years. So will there be more interest rate cuts on the horizon? I would think so. The RBA made a notable decision by reducing the cash rate. However, this move doesn't signal a complete shift in strategy, especially when it comes to inflation. So this is because the board's assessment indicated that monetary policy has been restrictive and will continue to be so even after this reduction. So what does that mean for inflation? Well, some of the upside risks to inflation appear to have eased, and there are signs that disinflation might be happening a little bit more quickly than previously anticipated by the board. And while this is encouraging news, the board said it remained vigilant, recognizing that there are risks on both sides of the equation. The board's latest forecasts also offer a word of caution. If monetary policy is eased too much and too soon, disinflation could stall. This could result in inflation settling above the midpoint of the board's 2 to 3% target range. So by carefully removing a bit of the policy restrictiveness, the RBA acknowledged that progress had made while also maintaining a cautious outlook. In short, progress has been made, but the journey is far from over as far as the board is concerned. The inflation peak of 2022 was a challenging time for everyone, with prices soaring and wallets really feeling the pinch. But there's good news ahead. Inflation has fallen substantially since that peak, and higher interest rates have played a crucial role in bringing demand and supply closer to that balance. According to the RBA, the December quarter, in that quarter, inflation was at 3.2%, which suggested that inflationary pressures were easing a little more quickly than many experts, including the board, had anticipated. It was a sign that the measures put in place, including high interest rates, were beginning to bear fruit. But that's not all, because continued subdued growth in private demand and easing wage pressures have also played a part. In the grand scheme of economic shifts, there's always a layer of uncertainty, including the lags in the effect of monetary policy, such as the 4 percentage points of interest rate rises that mortgage holders have weathered since 2022. Most borrowers navigated those choppy rate waters remarkably well, with the much publicised mortgage cliff never occurring. However, in an environment with higher costs of living across the board, some small cracks had started to appear, including a softening of market conditions in many locations around the nation. Now, while I don't anticipate that this one rate cut will spearhead significantly stronger market conditions, what it will do is provide a little bit of certainty that interest rates have passed their peak. And as I've often written about before, and I've spoken about before, confidence is one of the benchmarks of property investment planning and success. So I will keep you posted on all things property from around Australia as our year progresses. Don't forget to hit like and subscribe if you are enjoying the content, and I will see you all again soon. Bye.